I'm going to show you the razor's edge where real traders live, wait like a monk, strike like a lion, and how Jesse Livermore turned that impossible balance into a repeatable plan. The market never stops testing me. Not with crashes or melt-ups, those are obvious, but with the quiet hours when nothing happens, and the loud minutes when everything happens at once. In those spaces, I feel the split inside me, one hand gripping patience, the other itching for aggression. If I wait too long, opportunity drifts past like fog over the harbor. If I act too soon, I'm the one the tape uses for practice. Livermore, who made and lost more fortunes than most of us will ever touch, understood that the game is not about choosing patience or aggression. The game is sequencing them so precisely that the market's rhythm becomes your rhythm. Before we go deeper, tell me this: when the setup is almost there and your pulse starts to climb, what do you do? Hold your fire or press your luck? Comment your answer below. I want you to imagine the opening bell like a theater curtain. Most traders sprint on stage. Livermore took a seat in the balcony first. He studied general conditions, then the leaders, then the laggards, then the one or two names whispering a different story. He was hunting what he called the line of least resistance, that moment when the market stops debating and starts moving, when resistance no longer resists and support no longer supports. His form of patience wasn't passive, it was investigative. His aggression wasn't reckless, it was the exact moment the evidence tipped. He traded proof, not hope. If I'm honest, I earned these convictions the hard way. I've chased breakouts because boredom felt like failure. I've frozen on clean confirmations because my last loss felt louder than the current tape. That's when I realized Livermore's paradox is less a philosophy and more choreography. Patience builds the case. Aggression executes the verdict. He waited through noise, he acted on character change, and once aligned, he sat tight with an iron nerve. He didn't need to predict the path. He needed to recognize who had control now. Here's how we'll walk this film. First, we'll enter the inner conflict, why our biology makes patience painful and aggression seductive, and how markets exploit that wiring. Then we'll expose the psychological trap that drains accounts, being patient at the wrong time, and aggressive at the wrong time. From there, we'll slip on Livermore's lens, his rule set, his timing, his contempt for tips and attachment. We'll ground it with a real trade sequence where patience turned into precision aggression. Step through the emotional low point that tests conviction, and then crystallizes breakthrough, rule the demand that price prove intention before we prove conviction. After that, we translate it for modern screens, algos, feeds, volatility, and finish with a step-by-step daily playbook. We'll close with a cinematic sign-off you can carry into your next session like a mantra. Understand this: patience is not waiting forever. It's waiting with criteria. Aggression is not swinging hard. It's pressing when proof appears. Livermore built pyramids only from profit, never from pride. He cut quickly not to avoid pain, but to protect judgment, the only capital that compounds in every market. He treated boredom as a decoy and speed as a siren. His edge was the discipline to let time expose truth and the courage to move the instant it did. If you adopt that posture, everything changes. You stop asking, "Is this the breakout?" and start asking, "What behavior would confirm the breakout, and am I ready to act only when I see it?" Your watch list shrinks. Your attention sharpens. Your winners stretch because you're aligned early and you allow the river to carry you. Your losers shrink because you refuse to subsidize denial. That's the balance patience protects. Aggression pays. So take a breath. We're going to slow the tape down until you can hear what Livermore heard. Accumulation breathing under boredom, distribution hiding in euphoria, character changing in how price reacts, not what people say. When you can hear that, you won't need to guess. You'll recognize. What's harder for you right now, sitting through the quiet before confirmation, or pulling the trigger the moment confirmation arrives? Tell me in the comments. I'll weave your answers into the next chapters. In the next section, we'll step inside the conflict itself, the tug-of-war between the part of you that seeks safety in waiting and the part of you that seeks victory in action. And we'll begin to wire them into a single, tradable rhythm. I carry the energy from section 1 straight into my morning routine. The charts open, alerts set, the room quiet enough to hear my own breath. And yet, even in that calm, I can feel two currents moving through me at once. One asks me to wait, watch the texture of the tape, let the pattern finish its sentence. The other urges me to act. If I don't press now, someone braver will, and the edge will be gone. I don't try to eliminate either voice anymore. I try to conduct them. The paradox begins with time. Markets print bars in equal intervals, but information doesn't arrive that way. Structure matures unevenly. A level is tested 5 times in a week, and then, in 5 minutes, everything resolves. My biology hates that asymmetry. It pushes me to do something during slow periods and to freeze when velocity hits. Patience feels like risk when nothing is happening. Aggression feels like danger when everything is happening. The result is a trader who is early when he should be late, and late when he should be early. Livermore saw this before we had words for it. He treated patience as reconnaissance and aggression as mobilization. He wasn't choosing personalities. He was sequencing phases. First, he studied general conditions as the tide with me or against me. Then, he isolated leaders where his relative strength telling a different story. Finally, he stalked pivotal points the precise prices where the line of least resistance would reveal itself. Only after the market proved an intention did he move with force. His secret wasn't a clairvoyant instinct. It was the discipline to let time become evidence. Where I go wrong is in the swap. I've been patient during confirmation rationalizing, inaction as prudence, and aggressive during ambiguity relabeling, impulse as intuition. The tape doesn't penalize ignorance as harshly as it penalizes mistimed virtue. Patience is not noble if it withholds action from proof. Aggression is not courageous if it insists on action without it. The paradox is a problem of order, not of character. To work with that, I separate calendar time from behavioral time. Calendar time is the clock that fuels boredom. Behavioral time is the sequence of tells, a failed breakdown reclaimed fast, dips that find buyers earlier each session, volume that expands in the direction of pressure and dries against it, broader indices and alignment rather than conflict. When behavioral time is incomplete, I label my state surveillance, not waiting. That single word change keeps me from the emotional slide into impatience. Surveillance implies work, logging observations, marking microshifts, tightening criteria. Waiting implies helplessness. Aggression gets a budget. I don't ask, will I be bold today? I ask, how many decisions am I permitted today? And where are they most expensive if wasted? Livermore answered that with pyramiding logic. The first unit is a probe paid for by the risk budget. If I'm right, price pays me back quickly, and that payback funds the second unit. If I'm wrong, the loss buys clarity, and I step aside unscarred. In that frame, aggression is not a mood. It's a dividend of correctness. Another layer, identity. When I attach to being disciplined, I can drift into timidity. When I attach to being decisive, I can drift into recklessness. Livermore avoided identity traps by pledging allegiance to price. He'd say, in effect, I don't believe in stocks. I believe in behavior. If behavior changes, my posture changes, no explanations owed. That impersonal stance frees patience from becoming stubbornness, and frees aggression from becoming ego. There's also the role of speed after entry. If I'm aligned, I should feel it in how quickly the trade rewards my risk, not emotionally. Mechanically, Livermore expected to be right soon, not eventually. The absence of expected motion is its own message. This is where many traders drown. They misread silence as treachery and forced resolution, or they romanticize stagnation as coiling long after the context has cooled. The paradox resolves when I let time either validate my aggression or escort me back to patience. So the internal contract I keep is simple. Before the bell, define proof. During the session, let behavior meet that definition. At the moment of truth, act without drama. After entry, demand continuation or walk away. When boredom aches, I treat it as a signal to zoom out, not a cue to manufacture trades. When velocity spikes, I execute the plan I wrote when I was calm, not the story my adrenaline wants to tell. That's how Section 1's idea patience for the setup, aggression for the confirmation becomes usable. It turns the split inside me into a relay race, not a wrestling match. And it sets us up for the next chapter, where the paradox sharpens into a specific enemy, the psychological trap that hijacks both virtues. The moment money hits the line. In your last 5 trades, where did you missequence the virtues being patient during proof, or aggressive during ambiguity? Share one example in the comments so we can diagnose it together. Coming out of that internal relay between patience and aggression, the next opponent isn't the chart, it's the mind that wants relief more than it wants returns. I've learned that the trap doesn't spring when I'm ignorant. It springs when I'm uncomfortable. My brain bargains for certainty, and certainty is expensive. It makes me manufacture action inside ambiguity and withhold action inside clarity. That's how good reads turn into slow leaks. Here's how the trap is built. First, a clean narrative forms. The level is obvious, the structure is tight. The market tone is cooperative. I feel early conviction and confuse it with edge. Without proof, I lean in just a starter. I tell myself, but I've already crossed the line from surveillance to speculation. Now money is on the table, and something subtle changes. I stop analyzing and start arguing. Every tick becomes a piece of evidence in the case I'm prosecuting on behalf of my position. I widen the stop a little to let it breathe. I scroll for opinions that rhyme with my bias. I rename pain as patience. Livermore warned about this long before we had labels for it. He said the market punishes hope because hope is a refusal to read the tape. Once I identify with the trade, the tape turns into a mirror, and I mistake my reflection for information. That's when I commit the 3 quiet felonies of the psychological trap. Felony 1. Premature conviction. I act before behavior confirms. The motive is not greed alone. It's the desire to escape uncertainty. Being in feels safer than being undecided. I tell myself I'm anticipating. What I'm really doing is paying for comfort with risk capital. Asterisk felony 2. Post-entry justification. Having acted, I protect identity instead of capital. I hunt for micro-signals that endorse me, ignore macro signals that warn me, and reframe the plan midstream. The stop becomes a suggestion, the thesis becomes a story, and the story never ends well. Felony 3. Misallocated virtue. I am patient with losers and aggressive with winners, the exact inversion of professional behavior. I give it room when the market is charging me tuition and take it when the market is trying to pay me dividends. The trap also has a quieter twin, decorative patience. I sit on my hands after clear confirmation, wearing restraint like a medal. While the move leaves the station, I call it prudence. It's fear of being visible to myself if I'm wrong. I'm patient for the wrong reason, ego protection, not for the right reason, evidence insufficiency. Modern markets pour gasoline on both sides. Infinite streams of opinion make it effortless to outsource conviction. Nanosecond motion makes every wiggle feel meaningful. In that swirl, the mind wants to transact emotions, not edges. It wants the relief of doing or the relief of not doing, whichever numbs the moment fastest. That's why the trap repeats even for experienced traders. It's a physiological loop. Masquerading as a technical decision. Had to build mechanical countermeasures to break it. If then triggers before the bell. I write, if price does X with Y participation and holds Z for in units of time, then I act. Else I do nothing. That line lives beside my keyboard. If the condition isn't met, any urge to click is documented as emotion, not execution. Probe, not prove. My first size is a probe that tests the market, not a stake that tries to prove me. If the probe is immediately profitable, the market funds my second unit. If not, I exit and label the lost information spend. Time stop is truth serum. Livermore expected to be right quickly. When he has it, he treated time itself as disconfirmation. I set a time stop alongside a price stop. If the expected character change doesn't materialize within the window, I'm out. Even green trades get cut if they go nowhere. Stagnation corrodes judgment. Disconfirmation checklist after entry. I ask only bearish questions when long and the reverse when short. What would I see if I'm wrong? Is any of it present? A single yes triggers reduction. This prevents me from baptizing noise as signal. Identity guardrails. I'm not a patient trader or an aggressive trader. I am a sequencer. Patience is for setups. Aggression is for confirmations. Writing that sentence daily sounds trivial. Reading it during adrenaline spikes is oxygen. Kill switch thresholds to consecutive plan violations or 3 small losses in a session. Screens off. Livermore often left the room to save himself from himself. I do the digital version hard stop on agency until I can re-enter as an observer, not a defendant. These structures don't make me emotionless. They keep emotion from making policy. The more I use them, the more I see the trap forming earlier, first as a whisper itch to be early, then as a nudge justify a wider stop, then as a story the thesis evolving conveniently. Catching it at the whisper stage is the entire game. There's an elegant symmetry here. The same discipline that keeps me from being aggressive in ambiguity also keeps me from being passive in clarity. When confirmation fires, I execute because not executing is now the emotional choice. When confirmation is absent, I wait because acting would be a relief purchase, not a risk investment. That's how the trap loses leverage. I want you to audit one recent loser and one recent missed winner. In the loser, circle where you bought relief. In the missed winner, circle where you preserved identity. You'll likely find the same fingerprint: impatience that calls itself courage, hesitation that calls itself prudence. This is the doorstep to Livermore's worldview. He didn't conquer the trap by superior intellect. He outsequenced it with superior rules. In the next section, I'll step fully into his perspective, how he framed price's truth, used time as a validator, and built a method where patience and aggression aren't traits but timed roles in a single performance. Which felony bites you most? Premature conviction, post-entry justification, or misallocated virtue? Drop it in the comments and we'll tailor the next steps to that weakness. Livermore's perspective on the situation. When I first began studying Jesse Livermore, beyond the legend, the man behind the myth of Boy Plunger and Great Bear of Wall Street, I realized his true genius wasn't prediction. It was perception. He didn't see the market as a puzzle to solve. He saw it as a living language that spoke in behavior. His job was not to forecast what it would say next, but to interpret what it was saying now with absolute clarity. To Livermore, patience and aggression were not virtues to juggle. They were alternating states of precision. Patience was observation in motion, and aggression was the expression of proof. He would sit for days, even weeks, doing nothing but watching how price behaved under pressure, how it reacted to bad news, to thin volume, to the hesitation of others. His notebooks were filled with phrases like watching reaction or testing leadership. He was studying how the market handled stress, because, as he once said, a market reveals its true character under strain. He believed that the market's message was never hidden, it was simply ignored by impatient minds. The crowd's constant noise of prediction drowned out the truth of behavior. Livermore's edge came from a brutal humility, the belief that his opinions meant nothing until price confirmed them. He didn't trust rumors, tips, or expert advice. He trusted only the tape. To him, the tape was human nature, digitized fear, greed, hesitation, conviction, all compressed into movement and volume. That was his holy text. When he was patient, he wasn't waiting idly. He was gathering alignment. He tracked leading sectors, watched for correlations, and studied how leaders moved before the rest. Patience, for him, was like a lion crouched in tall grass. It wasn't inactivity. It was calculation. When the prey revealed itself, the clean breakout, the confirmed reversal, the market reaction that didn't fit the news, that's when aggression activated. And when it did, there was no hesitation. He struck in full conviction because the proof had earned it. Livermore's paradox, balancing patience and aggression, was born from his experiences of both triumph and ruin. When he lost his fortune, it was never due to lack of skill. It was always due to emotional drift. When he traded to relieve restlessness or to avenge a previous loss, in those moments, he admitted, he broke discipline with impatience. And when he recovered, it was because he rebuilt his internal sequence. Wait for behavior, act on behavior, and protect capital as if it were oxygen, he often said. A man must study general conditions first. That wasn't about economic reports, it was about the tone of the market. Was the tape forgiving or ruthless? Were breakouts sustaining or failing? He let those conditions determine his level of aggression. If the market was trending cleanly, he scaled in with confidence. If it was erratic, he reduced size or stood aside entirely. In Livermore's logic, the market set the speed limit. What's fascinating is how he turned patience into a weapon. While others saw stillness as wasted time, he saw it as an investment in clarity. Each minute he didn't act was a small premium paid for certainty. And certainty, to him, was priceless. He wasn't trying to be in every move. He was trying to be in the right move at the right time with the right size. That precision turned his discipline into power. In his writings, he described the market as a mirror for one's own discipline. The human side of every person is the greatest enemy of the average investor. He meant that impatience and aggression, left unsequenced, become self-sabotage. But once they are placed in rhythm, one feeding the other, they create mastery. Patience. There's a story I often return to, a modern reflection of Livermore's rhythm between waiting and striking. It was a market setup that, on the surface, looked ordinary. But beneath the surface, it was the perfect storm of psychology, structure, and timing. It was during a period when tech stocks were coiling after months of relentless rotation. The broader market felt indecisive, like a boxer feigning with both hands, not committing to a direction. But one stock, let's call it Helix Systems, started to show a behavior that caught my attention. It wasn't about news or hype. It was about character. For weeks, Helix traded in a tight, almost suffocating range. Every dip found quiet buyers. Every small breakout failed, yet sellers couldn't drive it lower. It was a standstill that felt artificial, as if the tape were storing potential energy. Most traders had stopped watching it. For me, that was the first tell. Boredom was building, and boredom is the cradle of major movement. Following Livermore's sequence, I moved into surveillance mode. I tracked daily volume changes, subtle shifts in momentum, and the reactions to sector news. I didn't touch the stock. The goal wasn't to predict, it was to recognize. Each day that it refused to break down under pressure, my conviction grew. But conviction without confirmation is poison. So, I waited. Then came the day the behavior changed. The market opened weak, the indices bled, and panic headlines rolled across the screen. Yet Helix did something unusual. It dipped briefly, absorbed the selling, and then began grinding upward against the current. That single divergent strength in the face of weakness was the confirmation I had been waiting for. Livermore called that kind of moment the pivotal point. He wrote that the market often reveals its hand not through the size of a move, but through how it behaves when it shouldn't. When a stock refuses to fall on bad news, it's telling you something profound. Control has shifted. That was the moment aggression became justified. I entered with my first position, small, deliberate, risk-defined. The feeling wasn't excitement, it was alignment. Livermore said a trader should feel calm when they're right, because the decision feels inevitable. I scaled and gradually as it pushed through the range top, each addition paid for by progress. Never by hope. The following days were quiet, controlled, measured. The stock climbed methodically, testing my resolve in a different way. Profits were building, but so was temptation. Livermore often spoke about this phase, the sitting tight phase, as the hardest part. Most traders exit too early because the waiting after being right feels almost as uncomfortable as waiting before. Patience had to evolve again, not as caution, but as discipline to let the trend mature. After 10 days, the move accelerated sharply. Volume exploded. Headlines caught up. Analysts began upgrading. The crowd saw what the tape had been whispering weeks before. I began scaling out into strength, not because I knew the top, but because Livermore's rule echoed in my mind. You can never tell how far a move will go, but you can tell when it no longer behaves as it should. The stock eventually doubled from that initial breakout point. My campaign didn't capture all of it, but it captured the essence, the transfer from patience to aggression and back to patience again. When I reviewed that trade later, what stood out wasn't the profit, but the sequence. I hadn't forced it. I hadn't predicted it. I had aligned with behavior. Each phase: observation, confirmation, participation, withdrawal mirrored. Livermore's entire philosophy condensed into one experience. That's when I truly understood what Livermore meant when he said that. Trading is not about constant action, but about positioning for inevitability. He didn't chase movement. He positioned himself where movement would eventually have no choice but to reward discipline. That campaign also revealed something deeper: the emotional loop that accompanies this balance. During the waiting, fear disguises itself as boredom. During the move, greed disguises itself as confidence. Managing that loop is where most traders break, and where Livermore proved immortal. In the next section, we descend into that emotional valley, the low point where patience becomes pain, aggression becomes guilt, and every trader faces the true cost of discipline. Because it's not about surviving volatility, it's about surviving yourself. Emotional low point or turning point. The first sign that I was entering the valley wasn't a red candle. It was a change in my breathing. The move in Helix had started clean, and then the chart went quiet to quiet. Range tightened, volume thinned, and every hour began to feel like a test I hadn't studied for. It's strange how silence can be louder than panic. In a sell-off, at least the market screams a verdict. In consolidation, it whispers questions. I found myself staring not at structure, but at my P&L, as if the number could reassure me. It never does. Livermore warned that markets correct into currencies, price, and time. And that time corrections are the crueler of the two. I could feel why. The position was green, yet conviction was fading by degrees, like a dimmer switch. That's the trapdoor beneath many good trades. Not catastrophe, but erosion. I started bargaining with myself. Trim a little, feel better. Move the stop, feel safer. None of those impulses were about alignment with the tape. They were about anesthesia. The longer nothing happened, the more my mind tried to invent work to do. So I forced a reset. I printed the chart and wrote 2 questions on it in thick black ink. Has price disproved my thesis? And what would I need to see to justify an ad? Under the first, I listed objective conditions: a close back below the breakout level on expanding volume, failed retests that weren't bought, index divergence turning hostile. Under the second, I wrote a tight pullback that holds the prior high, rising volume on pushes, declining on dips, relative strength on red index days. Then I stepped away. If the conditions didn't appear, touching the position was off limits. The page became my chaperone against boredom. The next day delivered a wobble. Helix dipped into the top of the prior range and lingered. My pulse spiked. That's when Livermore's phrasing, the line of least resistance, helped. If the true line had flipped, I should see character change, not just price dip. Character change means action where it shouldn't be easy, sellers pressing and holding brakes, buyers failing to defend obvious levels, range expanding against my bias. None of that showed up. Volume on the dip was anemic. Rebounds were quick. The index was weak, yet Helix refused to cascade. The tape was passing a stress test that my nerves were failing. I set 2 alerts, one a hair below the invalidation level, one above a micro high that would confirm reacceleration. Then I closed the platform. That choice felt like heresy, abandoning the screen in the middle of uncertainty, but it was exactly what Livermore did when he knew his mind could become his counterparty. He would leave the room so his rules could trade without him. When the upper alert fired the following afternoon, I walked back and saw volume thicken and added a measured unit. The relief wasn't euphoria. It was alignment restored. Here's what the low point taught me. Patience before entry and patience after entry are different muscles. The first resists FOMO. The second resists self-sabot. Aggression before confirmation is recklessness. Aggression after confirmation is responsibility. The only way I found to keep those lines clean is to ritualize decisions. Write the invalidation. Write the add criteria. Write the conditions for do nothing. And then obey the paper when the screen gets noisy. Livermore's first loss is best loss rule lives here too. On a different day, if the lower alert had triggered with conviction, I was prepared to liquidate with zero drama. That's not weakness. That's how patience recycles and aggression survives for the next campaign. The low point isn't the enemy. It's the toll gate. You either pay with discipline now, or you pay with capital later. When Helix finally broke upward again, it wasn't fireworks, more like an exhale turning into a stride. That's how most real trends move, less cinematic than durable. I scaled once more, then shifted attention to managing the campaign with trailing structure, not trailing fear. The equity curve mattered less than the behavioral story. Buyers in control, sellers opportunistic. Time working for me instead of against me. This valley is where traders either cement a method or return to superstition. I had to choose the method Livermore sequence, because it gives me something stronger than confidence, procedures that survive mood. And that is the real turning point. Common hook: when your trade goes quiet and doubt gets loud, what's your move? Trim for comfort, tighten stops, or walk away and let alerts work. Share your default response below. Let's tune it into a rule you can trust. In the next section, I'll distill the breakthrough principle that turns this valley into a system, the exact rule that reconciles patience and aggression into a single, tradable rhythm. Livermore's breakthrough rule, or lesson. At the core of all of Livermore's wisdom sits one rule, deceptively simple yet endlessly deep. Wait for the market to prove itself before you prove your conviction. Everything else he ever wrote or lived through, his greatest profits and his most devastating collapses, circles back to this rule. It is the spine that holds together patience and aggression, reason and instinct, silence and strike. Livermore realized early in his career that prediction was poison. The crowd tried to be prophets. He chose to be a detective. He studied reactions, not events. If bad news hit and prices refused to fall, that was strength. If good news landed and prices couldn't rise, that was weakness. The event didn't matter. The reaction revealed truth. He called this watching the tape breathe. What mattered wasn't the story, it was the behavior following the story. This single shift changed everything for him. It took him out of the emotional current of what might happen and anchored him to what already is. The waiting became scientific, not sentimental. When proof appeared through confirmation, through price following its natural path, he moved with controlled aggression. Because the burden of proof was no longer on him. The market had already testified. The breakthrough, though, wasn't just tactical. It was psychological. By demanding proof, Livermore gave himself permission to detach from ego. He no longer needed to be right first. He needed to be right after the fact was visible. That difference seems small, but it's the entire separation between gambling and professional trading. The gambler needs to be early. The professional needs to be aligned. He described it as the moment when the line of least resistance becomes visible. It's not visible to everyone, only to those patient enough to let the noise settle. When it appears, the right course of action feels almost inevitable. The patience that held you becomes the power that drives you. The aggression that once felt reckless becomes responsibility. You are executing what the market already whispered to those who were quiet enough to hear. Livermore's structure around this rule was mechanical. He would observe, identify a level of importance, and let the market approach it on its own. If the reaction at that level carried conviction, he'd test with a small position of probe. If the tape followed through, he'd add, scaling into strength. If the tape contradicted him, he'd cut instantly. That small loss wasn't a failure. It was tuition. It bought him clarity and preserved his composure for the next opportunity. He also developed timing within confirmation. A move that confirms too easily and immediate, emotion-fueled surge is often a trap. A move that confirms through quiet absorption, where the market behaves naturally, without drama, is genuine. Livermore learned to sense that difference through observation. He said, "True strength announces itself softly. Modern traders call it composure and price action." The rule even governed his exits. Once the behavior that justified his entry ceased, when the line of least resistance began to flatten, he no longer argued. He liquidated. It wasn't a guess. It was obedience. Patience found the entry. Aggression built the campaign. Discipline preserved the gains. The circle was complete. He made and lost millions by living and violating that rule. When he stayed faithful to it, he became a legend. When he abandoned acting before proof, seeking redemption instead of evidence, he paid the price. That honesty is why his lessons still cut through the modern noise. In my own trading, that rule has become a compass. Every day, before the session begins, I write a single sentence at the top of my notebook. Let price confirm your belief, not justify your fear. It keeps me from preemptive trades and premature exits alike. If nothing confirms, I do nothing. If proof appears, I execute. If proof disappears, I exit. That cycle keeps me sane when everyone else is chasing narratives. Livermore's greatest legacy isn't that he predicted market sits, that he stopped trying to. He built a life around recognition over prediction. And in that recognition lies liberation. You no longer carry the need to be right. You only carry the responsibility to respond correctly. In the next section, we'll bridge this philosophy into the modern trading world where algorithmic speed, constant information, and emotional overload make patience nearly extinct and aggression dangerously cheap. We'll see how Livermore's century-old rule is, paradoxically, the most modern trading principle we have left, how it applies to modern traders. Livermore's rule might have been born in the ticker tape era, but it's even more necessary today. The market hasn't changed its nature, only its tempo. The speed of execution, the abundance of information, and the noise of social media have created an illusion that patience is outdated. Modern traders confuse availability with opportunity. Every flashing candle feels urgent, every alert demands attention. Yet beneath that acceleration, the same principle governs survival: wait for proof, then act without hesitation. Technology has removed friction from trading. It's now possible to enter and exit positions in milliseconds, to hold dozens of charts open, to receive hundreds of opinions before breakfast. But what it hasn't removed is emotion. If anything, it has multiplied it. Livermore didn't have to contend with the dopamine feedback loops of notifications, or the anxiety of live P and L updates. He fought the same human impulses with fewer distractions. We fight them under constant stimulation. His discipline, therefore, isn't old-fashioned, it's revolutionary. For the modern trader, patience is no longer just the absence of trades. It's a deliberate filter against overload. The digital age rewards those who curate information ruthlessly. Livermore's general conditions now translate to data context understanding. Whether the market environment favors trending behavior or mean reversion, whether volatility expansion is justified or artificial. Without that filter, aggression becomes randomness. With it, aggression becomes precision. Aggression today also needs reinterpretation. It doesn't mean pressing buttons quickly or trading size impulsively. It means executing decisively when alignment appears. The best traders I know act with zero hesitation once their predefined proof conditions are met. They aren't reckless. They're rehearsed. The waiting phase is long and silent, but the moment of execution is instantaneous because the decision was made hours earlier. Livermore did the same, only without automation. His orders were prepared, his triggers predetermined. When the tape confirmed, he simply carried out what he had already decided. Modern markets move faster, but behavior still rhymes. Take false breakouts, momentum traps, and news reactions. The surface may differ, but the underlying psychology is unchanged. The crowd chases, exhausts itself, and fades. Livermore's focus on reactions, how price behaves after news, not because of it, is the timeless edge. In 2025, that could mean watching how a stock holds after an earnings miss, or how indexes absorb a rate announcement. Machines execute trades, but humans design the algorithms, and human bias still leaks through. In practice, this means adapting patience and aggression into structure. Before every session, define proof points, levels, conditions, and behaviors that validate a thesis. Automate alerts for those. Step away. Let technology guard your patience instead of eroding it. When an alert fires, return as a participant, not a spectator. Execute your plan as Livermore would, methodically, without debate. The paradox of the modern era is that we have more data than ever, but less attention. The edge now belongs to the trader who can still sit, observe, and interpret behavior without drowning in it. Livermore's stillness, his ability to let the market expose itself, has become rare. But it's that rarity that makes it valuable. The fewer people who can wait for proof, the more profitable it becomes to do so. There's another angle to his relevance: risk. Livermore's biggest losses came when leverage outpaced discipline. Today, leverage is built into every trading app. It's easy to mistake access for capability. Patience is the only counterweight to that temptation. When you force yourself to wait for proof, you automatically limit overexposure. Aggression becomes funded by accuracy, not emotion. I think of modern trading as jazz. Data is the melody, algorithms are the rhythm section, and human judgment is the solo. Livermore's principle: act only after confirmation, keeps the music coherent. Without it, everything turns to noise. The tempo may be faster now, but the discipline must be slower. His rule also bridges across time frames. In intraday scalping, it means waiting for order flow confirmation before entry. In swing trading, it means waiting for a trend's structural integrity to reveal itself. In investing, it means letting fundamentals show consistency before conviction. Regardless of scale, the DNA is the same: prove, then act. The irony is that most of the tools we now use could have made Livermore even more dangerous if paired with his restraint. Algorithms that scan for behavioral confirmation, statistical models that verify volume expansion, automation that executes without hesitation. These are extensions of his thought process, not replacements for it. Technology amplifies whatever discipline or chaos already lives in the trader. Livermore's wisdom survives because it bypasses the surface. It's not about tickers or technology, it's about the choreography between stillness and decisiveness, the balance of readiness and restraint. The more the market changes, the more step-by-step practical implementation. I'm going to turn everything we've explored into a daily operating system, a sequence that lets patience and aggression trade places at exactly the right time. This is the routine I run when I want Livermore's logic to show up on my keyboard, not just in my notebook. Pre-market patience as preparation. I begin with general conditions. Livermore's first commandment. I scan the index futures, sector breadth, and leaders, laggards to answer a single question. Is the tape forgiving or ruthless today? If breakouts have been sticking for several sessions, I label the context supportive. If they've been whipsawing, I label it hostile. That one adjective will throttle my aggression later. Next, I curate a short watch list, 5 to 8 names only. Each must have 1. A visible structure range, base, tight flag to a clearly defined pivotal point, and 3. A plausible crowd misunderstanding, why the majority might interpret it late. For each name, I write 2 sentences. Proof looks like, and disproof looks like. Proof is behavior, e.g., reclaims and holds 98 on rising volume for at least 30 minutes. Disproof is equally objective, e.g., loses 95 on range expansion. Sellers hold the break, then I set alerts at the proof and disproof prices and close those charts. This is how I keep patience from turning into screen staring. If I'm meant to act, the platform will call me. Opening our patience as surveillance, I do not trade the first 5 to 10 minutes. Unless my pre-written proof fires cleanly, I narrate what I see in one-line notes. Week open, leaders resilient, or good news. No follow-through. Livermore watched reactions, not headlines. This forces me to do the same. Entry protocol, aggression earning its way in if a proof alert triggers. I step through a micro-checklist that lives on a sticky note. Is the move occurring in a supportive or hostile tape? Aggression scaled accordingly. Is volume confirming, or is this a lonely print? Is the reaction where it shouldn't be easy? E.g., strength on weak index. If 2 of 3 are yes, I place a probe starter size only. The probe tests the market. It never tries to prove me right. I pair it with 2 stops. Price stop below disproof and time stop, e.g., if no follow through in 45 minutes, reduce, exit. Livermore expected to be right soon, not eventually. The time stop operationalizes that. Scaling aggression from strength, never from hope. If the probe shows immediate alignment, push, hold, and organized pullback. I add unit number 2 at the first constructive retest. Each add must make the prior risk safer. Average improves. Stop rises under structure. I never pyramid into slop. If the tape is hostile, I cap it to units. If supportive, I may allow a third, but only on fresh confirmation. That way, the market sets my speed limit. As Livermore insisted, in trade management, sitting tight with rules, I monitor character. Not every tick. Are dips being bought faster? Are rallies less labored? Is volatility compressing in my favor? If character holds, I trail structure, not P and L beneath higher lows, under prior breakout levels. Never so tight that ordinary noise ejects me. If character changes, failed retest, heavy reversals, or should hold, but doesn't, I cut partial or all. The first loss is still the best loss, even when I'm green. Small give-backs maintain clarity. Kill switch protect judgment, not ego to plan violations or 3 scratches in a row. Screens off for 30 to 60 minutes. Livermore literally left the room to preserve discipline. My modern version is an enforced reset. Aggression without judgment is just velocity. Post-session review where patience compounds. I grade the sequence, not the outcome. Did I wait for proof? Asterisk, did I size only after alignment? Did I cut when character changed? Did I sit tight when character held? I tag each trade with P, patience failure, A, aggression failure, or R, rhythm kept. The tags let me see drift before my equity curve does. Weekly ritual, Livermore's general conditions. Expanded once a week. I step back and re-answer, forgiving or ruthless. If the answer changed, I update next week's throttle and forgiving tapes. I allow one extra ad and slightly wider structure stops. In ruthless tapes, I have size and demand cleaner proof, e.g., close above. Then intraday retest and hold. Context decides how loud my aggression is allowed to speak. Environmental and energy controls guardrails for patience. I trade in blocks. Preparation block. Execution block. Review block. No endless scrolling between. During execution, social feeds stay muted. Only alerts and my checklist are allowed on screen. I set water and walk timers because a dehydrated, screen-locked brain invents trades to feel alive. Livermore's solitude is portable. I create it on purpose. Templates you can copy today. Proof card per ticker. If price reclaims, holds X for N minutes with expanding volume. And index is neutral plus, then place probe. Stop at Y. Time stop Z asterisk scale plan. At only on retest and hold or fresh pivot. Never above an extended candle. Each ad must improve AVC and raise structural stop. Exit rules. Character change greater than opinion. If two anomalies appear, e.g., heavy reversal plus failure to rebid, exit first. Analyze later. This is the spine that turns philosophy into practice. Observe gives proof, gives act, gives scale, gives sick, gives adjust, gives review. Patience owns the first two verbs. Aggression owns the next two. Discipline owns the rest. Run this loop long enough and the market stops being a place to express feelings. It becomes a place to execute roles. Which part of this operating system would most improve your next 10 trades? Time stops, scale rules, or the kill switch? Tell me in the comments so I can tailor a printable checklist for you. Cinematic conclusion, an emotional sign-off when I look back over the pattern of Livermore's life, and the mirror it holds up to my own trading. What I see isn't just a collection of market victories and collapses. It's a long exposure photograph of human behavior, light and shadow woven together in rhythm. His balance between patience and aggression wasn't a trick or tactic. It was a meditation on control, a discipline that turned chaos into choreography. Every trader eventually reaches that quiet realization: the market is not an opponent, it is a reflection. Every hesitation, every burst of impulsive energy, every overconfident chase, it's the same dance repeating under different lighting. Livermore's paradox dissolves when you stop treating patience and aggression as opposites. They are complementary instruments in the same composition. Patience writes the sheet music. Aggression performs it. Without one, the other has no melody. To live this balance, you have to accept something uncomfortable. You will never master the market. You can only master your responses to it. The chart isn't testing your intelligence, it's testing your sequencing. The question it asks each morning is simple: can you wait for proof? And can you act when proof arrives? The traders who fail are the ones who answer both questions with hesitation. The discipline to wait is not passivity. It is faith in the process you designed. The discipline to act is not recklessness. It is respect for the evidence you demanded. Once that connection is made, trading becomes quiet again. The noise fades, the chatter slows, and you begin to feel the same composure Livermore must have felt when he said, "The big money is made in the sitting." He never meant sitting still in ignorance. He meant sitting aligned in conviction. What stays with me most from his story is not the money he made, nor the fortunes he lost, but the symmetry of his philosophy. The patience that protected him in drawdowns was the same patience that prepared him for great runs. The aggression that made him legendary in bull markets was the same aggression that rescued him in reversals. He was, at his best, a man synchronized with uncertainty, never fighting it, only reading it. Modern traders often chase systems, algorithms, secret indicators. But the real edge isn't encoded, it's cultivated. It lives in the seconds between seeing confirmation and acting on it. Those seconds determine everything: profit, loss, identity. If you can master that pause, you've already stepped into Livermore's arena. So, when the next setup appears, don't rush. Let the story finish its sentence. Let proof appear in its own time. And when it does, strike not with emotion, but with precision. You'll know the difference because the decision will feel quiet, not dramatic. That's the paradox resolved: patience that waits for proof, aggression that executes without doubt. Together, they form the rhythm of professional trading. That rhythm doesn't just make money, it shapes character. Trading, at its deepest level, is a dialogue between who you are and who you need to become to survive uncertainty. Livermore answered that dialogue with structure. And if we can do the same, we'll find that his century-old rule still beats at the heart of every modern chart, steady, timeless, and true. That's where this journey ends, not with prediction, but with presence. Not with control, but with composure. Patience for the setup, aggression for the confirmation, silence between them. The rest is noise.